I'm Tara Bellio, and I'm part of the marketing team at BDO First Call Debt Solutions. This is the time of year when many Canadians resolve to make changes for the better. But making a promise or a resolution is just the first step. On our last podcast, we talked about how changing your mindset can help you take control of your debt in the new year. For example, you can strengthen your determination to pay off your debt by finding what motivates you. Or you can regain control over your debt by taking back your power to make the necessary changes. It's all about looking at your debt from a different perspective. Now, it's time to get practical. How do you take your new and improved debt mindset and put it into action? We asked our licensed insolvency trustees to offer a few practical strategies to help you with that. In this week's podcast, we have our president, Doug Jones from our Barrie office, Jennifer McCracken from our Vancouver office, Craig Friesick from our Calgary office, Nancy Snedden from our St. John's office, and Jasmine Kalniuk from our Saskatoon office. Doug, why is it important for Canadians to understand their total debt? What are a few steps Canadians can take to face that reality?
A starting point to a financial plan is to have a full understanding of all your debts, which includes the total outstanding balance, the interest payments, the interest charges, and the timeline for when the debt will be fully repaid. Once you have the complete debt picture, you need to develop a plan to pay off this debt, and hopefully before retirement. In looking to pay off the debt, people need to look at making more than the minimum monthly payments and avoid making interest-only payments. Over the last number of years, there have been an explosion in the home equity lines of credit, or HELOCs, which require interest-only payments. So while the interest rate is very low, people are making interest-only payments and not actually reducing their debt at all. My advice to people would be to go to debtsolutions.bdo.ca, which is our online site, and use some of our online tools like the debt calculator and our budget worksheets to develop a plan which will allow them to repay their debt, and then once the debt has been repaid, divert the payments towards retirement savings.
What's your advice for Canadians who feel that they'll always have credit card debt, Jennifer?
My first bit of advice would be to stop using the credit card as a borrowing tool. It is a convenient way to make purchases. We all need it for the online payments, for parking. Obviously, it's a lot more convenient to use a credit card, and it's fast and easy. But what you want to be focused on is ensuring you're paying the balance off within 1 to 2 months. If you're keeping an unpaid balance month to month on any credit card accounts, it's important to remind yourself that every time you're using the card, you're adding to the debt load. You're not paying it off. The more you use it, the higher your debt will be and the greater interest charges you're going to have for those purchases. So we should be cautious about taking on additional debt. Just because there is a credit limit on the account does not mean that you need to spend to it. So think about the fact that if you have $10 in your wallet, are you just going to spend the $10? No different with the credit card limit. Just because it's there doesn't mean you have to spend it or use it. If you're only making minimum payments and you're skipping payments, also be cautious about transferring balances. It is a sign of financial difficulty when you have balances on multiple cards and you're needing to use credit to meet your minimum payments. Figure out how much the interest charges are on the purchases that you're making. That's actually quite a sobering thought for a lot of people when they realize that the goods that they're buying on credit are not actually getting paid for well into the future, and they're actually paying more for those goods because of the interest charges. Think about before you do the purchase, do you even really need the item? What am I using my credit cards for? What am I buying? If you're finding that you have an issue with impulse spending, you see something that's on sale and you just have to have it, don't bring the credit card. Leave it at home, leave it in the freezer, do whatever you need to do to not make those purchases. Another tip I give a lot of my clients that is helpful for those that are really super connected to the internet, to sales, I would say unsubscribe to emails that are bombarding you with special offers and flash sales. Remember that just because it's on sale is not a reason to buy it. Remember, you've set a budget and you want to spend within that budget. And this item, because it's on sale, does not mean that we're going to break and overspend on the budget that you've already planned. Also, avoid online triggers. You know yourself better than anyone else. So if you know that visiting a website is going to give a little bit of make you susceptible to buying those things that you don't need, avoid doing it. Find something else to do and avoid going to those websites. The last bit of advice I give Canadians is that if you are having difficulty managing your credit card debt, there are always options to seek out help and to ask those questions. And you can find that with credit counselors, with licensed insolvency trustees. You can get a lot of free advice over the phone and even online. And we're available at any time should anybody have those questions.
Craig, why should Canadians be wary about overborrowing when they're buying a home?
Ideally, we wouldn't need to borrow money for a home. However, reality is most of us will need a mortgage. Starting in January of this year, the federal government is requiring that Canadians applying for a new mortgage must pass a stress test to make sure that they would be able to afford their mortgage payments if interest rates were higher than they are today. You don't have to wait until your mortgage is up for renewal to perform this stress test. Use an online mortgage calculator. The Federal Consumer Agency of Canada has one on their website, and see what your payment would be if interest rates increased by 1% or 2% or 3%. Would you still have extra room in your budget for the unexpected? Once again, we're thinking long term. A mortgage payment that's affordable now may not be affordable if interest rates rise or if there's a housing bubble. What if your financial circumstances change, like an increase in expenses or loss of income? Be prepared for the future.
Nancy, how can understanding your credit report change the way you feel about your debt?
Well, your credit score impacts so many different things when it comes to your debt. So it will not only impact your ability to qualify for a new loan, whether it be for a mortgage or a car loan or even a credit card, but it will also impact the interest rate that you're being charged. So it is important that you understand how your credit score works, especially if you're going to be seeking new credit in the future. So even the amount of the overall debt that you're carrying in relation to your total available credit can impact the credit score that you have. So rule of thumb is that you should not have any more than 35% of your existing available credit used at any given time. You should also make sure that you're making your regular minimum payments. Just one missed payment can impact your credit score negatively. So when you're looking at paying down your debt and you're looking at, your credit score and how you can improve that, because it certainly is one of the most asked questions that I get by people who have gone through a proposal or bankruptcy is, how do I improve my credit score? It's making sure that you're not using all your available credit, that you are making your minimum payments, and where possible, of course, you're paying more than the minimum payment to get that debt paid down more quickly.
Finally, Jasmine. We often talk about the benefits of having a personal or household budget, especially when it comes to tracking spending and paying off debt. For Canadians who already have a budget, how should they look at their budget differently? And how will that different perspective about budgeting help with paying off debt?
So having a monthly budget is very important, but it shouldn't be carved in stone. So the budget should be flexible enough to change or adjust as a person's life and their circumstances change. So when we consider financial circumstances that might change, that would be things like changes in income or increases or decreases in debt level, or if a person wants to set a new financial goal and it requires a financial commitment, or if they've just made a large purchase, such as a vehicle. So those things should be considered, and also life changes should be considered. And that would be things like a marriage, a divorce, having a child, or going into retirement. So the budget should be flexible enough to capture those changes in financial circumstances and in life circumstances. One of the suggestions would be to look at the income that's available after your monthly expenses have been paid, and then so that amount would be there to use toward debt repayment. And from that, figure out a strategy that's most effective at decreasing the number of debts outstanding, hopefully with a mind toward paying off the more expensive or the higher interest debts first. Also, a person should really regularly look for ways that they can possibly cut back their expenses, so they can free up a little bit more income in order to pay off the debt sooner. And there's lots of resources online on the BDO website that are tools that can be used for budgeting and for money management.
Thanks to our LITs for answering our questions, and thank you for listening to this episode of our BDO Debt Solutions podcast. We hope our January podcast about changing your debt mindset inspired you to look at your debt differently. We encourage you to share this podcast with friends and family, and check out our YouTube channel, BDO Debt Solutions Canada, for more podcasts and videos. Until next time, I'm Tara Bellio, reminding you that it is possible to leave debt behind.